Hello guys, I hope you're doing good. It's been a while since we did our top-down analysis, and today being the weekend, so I'm going to give my top-down analysis from at least several major pairs, and I'm going to start with this pair. This is GBPUSD. On this pair, when we look at the monthly time frame, the bigger time frame, what do we see here? We can see the price has been bearish in terms of the flow. But technically, the price was bullish after took out this low, which is a liquidity around this zone. All right. So this was your range between this high and this low. So do you look for a sell? The price went in. If we measure the range here, we can see there's a gap, internal liquidity around this zone. Internal liquidity is here. There's a gap there. So does it mean? This means that this is your imbalance. Fair value gap there that was filled. And what does it mean? You're supposed to look for a sale here. But I want to look at this price. This is a pullback. I want to follow this in a weekly time frame so that I can understand where the price is going to. Now, price tapped on this gap and price left the zone, came to the downside. But when you look at the move seems to be bullish here. The move seems to be bullish here. So when you look at this move, what are we seeing here? Price took out this liquidity. We took out this liquidity, and again, this was the breaker block here. Okay. Price taps on this breaker block after tapping out liquidity and went to the upside. And right now, price took out this high, which is a weekly liquidity. Price taking out that high, remember, want to trade after liquidity has been taken out. Okay. Every time liquidity is taken out, there's always an opportunity to go in. So looking at this, and we see that price took out that low. So what do we have here? We can now know that there's a sale here. And this is the next weekly liquidity that has to be taken out. But I know that before price goes to this high here, must first go back between this high and this low. This is a weekly range, right between this high and this low. So you're supposed to look for a sell here after price took out this liquidity. And I'm going to narrow down to a daily time frame to open up the chart a little bit more. And you can see this is a chart between this high and this low. You can use the gun box to measure the level or the fib. The level of interest that I want to see price come to is around this zone, yeah? That's the zone that I want to see price drop to this level. So we're going to have a sell until around this zone. And the next point of liquidity or a pool of liquidity is this low, all right? That's the low of liquidity that I want to see this price taking out to this level. So again, I can narrow down to I can go to the DXY and check the DXY, what it's doing. The DXY is supposed to be bullish. When you go to DXY on daily time frame, I want to see DXY being bullish. And when you check on DXY, okay, when you check on DXY, this is something that I did some analysis way back. I was looking for this low to be taken out. And when you look at this level, price took out this liquidity and now it's bullish, going back into this fair value gap here. This way I want to see price going back here. So when I narrow down to a 4 hours time frame, I want to see price being bullish on the DXY, the dollar index strength. And you can see price continuously very strong, and this is the nearby liquidity here. Price has taken out that high. So we're going here. The moment the DXY remains to be bullish, then what does it mean? We continue selling the GU. So I'll go back to the GU. We'll go back to the daily time frame first. I know that the DXY is now bearish, bullish. Now the dollar index is being bullish, then we're going to sell the GU. So I'll go to a 4 hours time frame and look at what we have. The 4 hours time frame, price remains to be bearish here. So I'll go to a 1 hour time frame. Okay, when I open the 1 hour time frame, now the structure is clean. You can see price Look at this liquidity. Liquidity get taken out and price violated this low. There. That low was violated there. But the market violated this low. So this one's a shift in price in 1 hour. Shift in price there. There's a shift in price there. That's like a choke. And what's your new range? Your new range is between this high and this low. This low here. So what are you going to do? I want to see price pulling back itself in the range, sorry. In this range here, then selling off. That's what I'm looking at. And actually, I'm looking at this area. Okay, between this gap. This I want to see price coming back here. And again, this is my breaker block here. Breaker block. So if price retraces back to this level, there you can now look for a sell from around that zone. So tomorrow you might get a small pullback of price to the upside, then look for a sell there. And this is the GU. So I'm going to look for a different pair again. I'm going to go to gold, right? We have been selling gold ever since last week. So now go to gold, this is where it is right now. I'll open the bigger time frame, the monthly time frame, and look at gold on a monthly time frame. On a monthly time frame, the bigger picture here is the gold has been taking out liquidity, and the last liquidity to be taken out was this level. Okay. Once this level is taken out, you're supposed to look for sales here. But remember now, this one is a bigger time frame, so you can narrow down to a weekly time frame. Have a picture on the weekly time frame. Now, when you open the weekly time frame, this is our range here. As the price took out this liquidity sold off, and the new liquidity taken out is here, right? That liquidity being taken out there, you need to look for sales. And as the target, this low is the hold low, which is a target, a point of liquidity that must be taken out. So this price is going to give us a retracement, and this means after this high was taken out, you're supposed to look for sales up here. So I'll drop to a daily time frame, open up the chart, and I know that, remember, we have already checked the dollar index. We know that the dollar index is what is bullish. And if once it's bullish, we remain bearish on anything to do the USD pair in it. So here we're supposed to look for a sell here. No, there's a sell. Where do you get your entry? You're supposed to sell here, and you already sold that on TikTok Live, and also the private community. We did sell there. So when I open here, what are we seeing here? This is a 4 hour time frame. Dollar, the gold remained to be bearish. I'll open the 1 hour time frame there to show you the shift in price and everything. When I open the 1 hour time frame, you can see there's a shift in price here. There, that's the liquidity grab. Misplacement of price. Okay, placement of price there. Then price went back into a gap. Which one here? Which we call internal range here. Price went there. And last week we did what? Last week we sold gold around this zone, right? So gold has gone down. And again, if it has gone down, what's your breaker block? The breaker block was supposed to be this candle here. Supposed to be a breaker block. Now this breaker being here, what does it mean? Price went down completely, and you can see it kept pushing the downside. It never came back to that breaker. So why are we looking? What is our range here in price? What do we expect here? I'll use a bigger time frame, like a 4 hour time frame, to show the range of price on the 4 hour time frame. So allow me to open the 4 hour time frame. The 4 hour time frame, the only level I'm looking at as where the price is likely to come back to is this this gap here. This is a gap that I want to watch this gap carefully. Price retracing back into this level. If price comes back in this gap here, then I'll be looking for a continuation, a sell, right there. If price comes back there, I'll want to look for sales there. and this is a zone located on a bigger time frame. Why am I looking for sell here? Because this low taken out, all right? When the price take out that low, we'll have a small buy there. So market might go down when it opens, push down, then comes back in this gap here. Then I'll be looking for a continuation to the downside, right? So I'm looking for a sell on gold coming next week. The next pair I can look at is the EURUSD. Now, on the EURUSD here, we'll go back to a bigger time frame. And I know that also it's a sell. Delete everything here. Look for the EURUSD. What do we see here? You can see the liquidity taken out there. What's the range? The range is between this high, this low. And price will go back into internal range, which we call it a gap. Was the gap between the low of this candle here, right? And the high, the third candle, skip this one and here. You can see price came back in this gap. And right now it's been like it has been stopping here for a while. So I can narrow down and look for this pullback here, right? Narrow down to a lower time frame, which is like a monthly, a weekly time frame. The weekly time frame, what are we looking at? We're looking at this bullish pullback here. Price went up and created a level of liquidity here. You can see that area. Price took out that low. Once took out that low, where did the price go again? Price went to the upside again to the same gap here, and you can see price was rejected again. And the next move that was taken out, the next low was that one. Of liquidity. Price took out this low, tried to go to the upside again, and the next pool of liquidity was here, taken out. Having this idea that price has taken out this level, I can narrow down to a daily time frame, try to open up the chart a little bit more, right, in terms of liquidity. And I want you to see some few things. You can see here this low taken out as the liquidity pool. Price takes out this level, goes to the upside, takes out this side. Now this is the weekly range, this low, daily range, and this high. And since I've checked the DXY and I've seen the DXY is bearish there, so we can open up the 4-hour time frame, try to look for sales here. What are we looking for? This pattern. Where is it? Okay. Price takes out liquidity, protect this high, violate the low, goes back in the range, and it's supposed to sell. So price took out the high there on a 4-hour time frame. What does it mean? The moment this high was taken out, you're supposed to look for a sell up here, around that zone. So I'll narrow down to a 1-hour time frame and show you the area. You can see price took out this high. The moment price took out that level, it's a liquidity pool. You're supposed to sell up here, which you missed. So what are we having here? Price, we want to see price take out this low. There's a pool of liquidity that is here. It has to be taken out. What is happening here? What we are likely to see this price do is that price went back into this gap. There's a gap here that is not tapped. This gap is something to watch out. Okay. On this gap here, price has a reason to go to the upside into this gap before selling off. But this is not the only confirmation we have. I want to show you price came, violated this level, went to the downside, violated this high there, right? Let me zoom a little bit, you see something here. I'm going to show you what we call volume imbalance between this area and this low. This is what we call volume imbalance. Price came back. You can see that this is the only body that is crossing here, but have some wicks here. This is what we call the volume imbalance. Price came back to volume imbalance, went down, came back again. What are you seeing here? Came back again and took out this high here. If I open a different time frame, you'll see it here. If I open a different time frame, you'll see this high. took out that high, price went down, tried to return here. So up here, I'm seeing something. You see here, there's this gap that we might see price going back into this gap. And the moment price goes back here, we can look for sales there, and we'll be targeting this low as what? As a liquidity pool here. So if I take you back to 1 hour time frame, see what I'm talking about. This area here, it might not be visible on 1 hour time frame, but you're going to get a price to push a little bit around half of this green candle. Then we'll be targeting this low as a liquidity pool. So those are the pairs I'm looking at today. And the last pair I want to look at is the USDCHF. The USDCHF. The USDCHF. USDCHF. Okay. The next pair I want to look at, I'll have to look at it from a monthly time frame. Now, when you look at this pair, it looks so bearish. Took out this what we call liquidity point there. The moment price took out this level, we see this is where you need to get your entry after liquidity has been taken out. This area. But let's say that you miss and price go back into each range. Now the range is between this high and this low. Here you can use so many tools. If you want to use the Fibonacci or something, you can just place a Fib here, the low here. You can see price went where? This is a more sensitive point in the price, this area. Using that, remove this one. Okay, remove the Fib. Price came tapped on this level, started going down. So we can narrow down on the monthly time frame and see the behavior of price around this zone. Around this zone, let's zoom a little bit. Price has to take out liquidity. So around this area, price took out this. You see this, the old high there. Price grabbed that level as a liquidity pool. From that area, price has to start selling off in target of the liquidity. Price up there, went down, took out this relatively equal lows, which is a pool of liquidity. Once price took out this level, you can see it went to the upside and again took where? Took out this liquidity pool here. Once it's done, this side is now protected. Why? Because it took out this level, so this side is protected there. Price cannot violate that level. Taps there and price went down again and took which level? This is the level that initiated this move, which is a liquidity pool. Price takes out that level. Again, after taking out this level, you can see after here, price again retraces back to the upside and it must take out another point of liquidity here. And if I zoom more, what this, I want you to look at the low of this candle. The low of this bullish candle, which is a bearish order block there. The low, the opening of that price, extend it here. Using that. Price respect that one because what is that? That one is a bearish order block. Price steps there on this candle. Price narrow down to a pool of liquidity, which one here? This is the old low. Price takes at that level, which is a liquidity pool. Again, from that level, price went up because when you look at this range, the swing, you have a big swing between this high, and this what? This low here. But since the price bearish went up, look out this liquidity here. Sorry. This liquidity. Price take out that level. It did what? It went to the downside. And it's not just taking out that level. The price is respecting what we call a bearish order block to identify the low of this candle here. There. See that. Bearish order block. Respect that level. Then this is protected. Okay. Yeah. Okay, price did that, and it will go take out the low, which is a pool of liquidity again. Which one? This one. This low being taken out, again, price will try to go up, but when it goes up, since this side level is protected, the price is not supposed to violate which level? To violate this, the high of this candle, the low of this candle here. But we can see price try to push higher. Try to push higher. Why? Where's the liquidity that was taken out? This level created the low. Price took out that level as a liquidity. But what happens here? Price cannot break this high. See, that high was never broken. Why? Because this high is protected because it took out liquidity. And price started going to the downside. So now, right now, our buyers on the weekly price is bearish. And price has to keep respecting all the up close candles. You can see here, price try to go to the upside into this shadow. And this is what we call rejection block. There's a rejection block here. This one. Rejection block taps there, goes down. Price again must do what I respect. You see this last closing of this candle there, bearish order block. Price respect it, goes the downside, and right now I have this. Okay, this is a bearish order block. So what is happening here? The weekly, that's a bearish order block. So I can now open the daily time frame, open up the picture very well, and this being the bearish order block, price taps there. Respects the low of that candle, goes the downside. The next thing is here, price respecting this move, and now coming back in this gap, which is it's a weekly gap. Yeah, where's that? There's a gap here, the low of this candle, and here. Now price is into a level of imbalance. What does it mean? The moment price taps there, you need to look for a sell. So I can narrow down to a 4 hours time frame and show you the gap between the low of this candle. Change the color into black. And the high of this candle. Right? And this is a gap that you have here. And you should prepare looking for sales there. Let's go for 1 hour time frame. 1 hour time frame, this is where the price is. We'll narrow to 15 minutes and see what the price is doing. In 15, price grabs liquidity there. Price violates the low, which is a shift in price. Choke. Then price went into a gap. Yeah. And move this one like that. And this. Press into this gap. And again here, this here, breaker, block, this one. So automatically you need to look for sales. Coming next week. I want to zoom a little bit more and show you something again. Price respects the low of this down close candle there. Price never tapped on this level, but if I zoom a little bit, you can see price again went to the downside. So what we have here is that price coming back here, the last end of it should respect the low of this candle. So what does it mean? When the market opens, you should be looking forward for a sell on USDCHF there. So guys, up to that point, thank you. And if you'd like to join our private community, join our Telegram, link in the description. And also, if you want to contact me direct, you'll find my contact on Telegram. You're welcome to join our team. And otherwise, thank you. See you in the next video. It's your boy, Mr. FX.